Hey guys, the Sage of Forex here. So today I'll be doing a continuation of my previous videos. So this is the market maker model, the two-stage market maker model. So on my previous video, guys, I taught you how to identify the two-stage market maker model pattern. So on this video, I'll be teaching you how to enter trades using this market maker model, guys. Yeah. So this is the higher time frame, by the way. This is how the market maker model pattern looks like in the higher time frame. So we're just gonna go down to the lower time frame for entries. So right now, I'm just gonna head down to the 15-minute time frame. Okay, okay. So now that we know how to identify the market maker model pattern, where are we gonna enter off our trades, guys? Because this is exactly what I'll be teaching you today, guys. So first of all, you should utilize the time and price, guys. We're gonna enter off our trades utilizing the time and price. Don't just enter off our trades, guys. Don't just enter for the sake of entering. You're using time and price, guys. Okay, since you're utilizing time and price, guys, there are time windows called kill zones. This is where we enter off our trades, guys. This is where our setup respects the most, guys, the kill zones. So there's the Asian session, the New York session, and the London session. But we'll be entering our trades using the London session and the New York session because this is where the market is most volatile. So right now, we're just gonna start, guys. Okay. So first of all, before you enter off any trade, you should mark out the day, the opening price of the day. So here in this case, the opening price of the day is 6 o'clock. This is the South African time, guys. I'm using the South African time. So in America, this is 12 o'clock. So there's a 6-hour difference between South Africa and America. So in America, this is exactly 12 o'clock. So I'm using 6 o'clock because it's the South African time, guys. Bear this in mind. So this is the opening price. This is where price opened exactly at 12 o'clock. So I'm just going to highlight the horizontal line of where price opened. This is the exact point where price opened here. So let me just do this so I should know that this is the opening price. So you should know that if the bias is bullish, guys, obviously when you're using the market maker model, if the bias is bullish, you should enter off your trades below the opening price during London session. And this is what we're gonna do right now. So right now, I'm just gonna highlight our London session. So our London session in the South African time, using the South African time, starts at 8 o'clock in the morning and ends at 11 o'clock in the morning, guys. This is our London session, guys. Our London kill zone. This is the London. And the New York starts at 2 o'clock. It is 2 o'clock, somewhere here, and ends at 5 o'clock. This is 5 o'clock. Okay. So this is the New York, guys. So exactly at this point, guys, exactly within these time windows, guys, this is where we'll be entering off our trades, guys, using this market maker model, guys. So what are we gonna look for? Since we know that we're in a buy program right now, we took out the sell side, the high time frame sell side liquidity, made a change in the market structure shift. So how are we gonna enter off our trades, guys, using this market maker model? So first of all, you should look at the PD arrays. After price breaks out the structure, market structure, look at PD arrays, things like fair value gap, order blocks, breakup blocks. So in this case, I noticed that we have a holding order block here, guys. We have a holding order block here, guys. So I know very well that price is not gonna come below this level over here. So this is our holding order block. So I know very well that price is not gonna come below here. So obviously, this is where I'm gonna enter off our trades. During the London session, this is where I'm gonna be entering my trades, guys. So how do I enter off a trade? So to enter a trade, guys, knowing very well that price is not gonna come below here, we just have to wait for price to seek out and take out liquidity within the London session. Look at this. This is where price takes out liquidity inside of the London session within the time zone, guys. Price takes out liquidity. So this point is where we should start looking for our buy entries, guys, in the London session. This is where you should start looking for your buy entries in the London session. So it can be aggressive here by entering immediately after price sweeps out this liquidity, putting a stop loss below this order block, knowing very well that price is not going to come below this order block here. Something like this. This is us being aggressive, guys, with targeting this high over here. So it's gonna give you a 1 to 4 risk reward, guys, targeting this high here. Or you can just target the second high or the fair value gap here, which is gonna give you a 1 to 5.7 risk reward, guys. So this is the first target, the second target, and the third target, guys. So but I prefer using this one, the first target, guys. Same applies to the New York session, guys. What do we have to look for? During the New York, we're just gonna wait for price to take out liquidity. This is liquidity, guys. Take out liquidity within the time zone. And this is where we're gonna look for our trades, guys. We're gonna look for our trades. So we're just gonna do this. So these trades, these entries are more aggressive, guys. I'm gonna teach you how to enter more confirmation entries. So these are just aggressive entries. So putting a stop loss below this zone over here. So your target is this one, which is a 1 to 3. After you see price breaking this structure here, just gonna wait for price to retrace back to a PD array, guys. To a PD array. So in this case, we can see that we have a fair value gap here. This is our PD array. We also have a breaker block here. This is a breaker block. This is a breaker. This is where price broke structure, guys. So it's a breaker block. So the breaker block is aligned with the PD with the fair value gap, making it a stronger PD array that we know price is gonna come to take her to enter this and go up. And if you look closely, we are inside the PD arrays are in the discount zone, because we know that price goes from premium to discount, discount to premium. So here all the PD arrays are in the discount. So this is exactly where I should enter off my trade, a more confirmed trade, guys. Exactly within this fair value gap here. Putting a stop loss below here. Putting the same risk, giving me a risk reward every 1 to 4.7, the first target. The second target is 5.8, 5.2.6. And the third target is closely about 5.8. Yeah. So this is more of a confirmed entry, guys, of the market maker model. Okay. So let's go down to the New York, guys. So again, in the New York, we're just gonna do the same thing, guys. Wait for price to break immediately after price sweeps up this liquidity, takes out this liquidity within the New York session, within the time zone. We're just gonna wait for price to break out structure, guys. Give us a market structure shift to the upside. So if you look at this, some market structure shift, guys. So what do we look for after price makes up gives us a change of character? We look at the PD arrays, guys. So in this case, what do we see? I can see that there's a holding order block here. There's a holding order block here. So I know very well that price is not gonna come below this order block here. So we got a holding order block here, guys. So besides the holding order block, what do we see? We have a fair value gap here, accompanied with the holding order block. So I know very well that price is not gonna come below here. So where am I gonna enter off my trade? I'm gonna use this fair value gap over here and put my stop loss below the holding order block. Look what happens. Price taps in and goes straight up. So this should be my first target, my 1 to 3 risk reward. My second target, 4.2 actually. And my third target is this fair value gap over here, guys. 4.9. This is the classic market maker model, guys. The two-stage classic market maker buy model, guys. This is just how I enter off the trades using this model, guys. Utilizing the PD arrays. So this is just it, guys. This is just it. So yeah, guys. I'll be doing another example on my next video. So the next example will be a 3-stage market maker pattern, market maker model pattern, since this one is the 2-stage. So stay tuned, guys. Stay tuned. So I guess I'm just gonna say goodbye for now. Okay. So the Sage of Forex signing out. Ciao.